Welcome to our deep dive into Mereo Biopharma Group plc, a small-cap biotechnology company listed on NASDAQ. Mereo specializes in developing treatments for rare diseases, a niche that often brings both high hopes and high risks. As with many biotech stocks, Mereo's share price is highly sensitive to clinical trial results and regulatory news. Over the past 3 months, the stock has experienced significant price declines, reflecting the sector's notorious volatility. In this video, we'll break down the technical indicators, explore what's driving the current price action, and consider whether this could be a turning point or just another dip in a challenging market. Let's start with the basics. As of December 30, 2025, Mereo Biopharma's stock is trading at just 0.285 per share on the NASDAQ. This is a sharp drop from its volume-weighted average price, VWAP, of $1.74 over the past 3 months, which included 62 trading days. The current price is hovering near its 52-week low of around 20 cents, signaling just how much value has been lost recently. With a Bollinger Band position of minus 50.79, the stock appears deeply oversold. Such a steep decline often reflects a combination of negative sentiment and sector-specific risks, especially in the biotech world. Biotech stocks like Mereo are known for their volatility, often swinging wildly on news of clinical trials or regulatory decisions. In the past 3 months, Mreo has faced substantial price declines, which is not unusual in this sector. Investor sentiment can shift rapidly, making it challenging to predict short-term movements. The sharp drop in price and high volatility underscore the importance of closely monitoring both technical indicators and news events when considering an investment in this space. Simple moving averages, or SMAs, help smooth out price data to reveal underlying trends. For Mereo, the short-term SMA 5 is $1.90, while the current price is far below this level. The SMA 10 at $1.96, SMA 20 at $2.01, and SMA 50 at $1.94 are all above the current price as well. This alignment across short, medium, and long-term averages points to a persistent downtrend. Essentially, the stock has been underperforming its historical averages, struggling to find support at any level. Exponential moving averages, or EMAs, give more weight to recent prices, making them quicker to react to new trends. For Mereo, the EMA 5 is $1.59 and the current price is still below this level. EMA 10 at $1.84, EMA 20 at $1.93, and EMA 50 at $1.94 all remain above the current price, reinforcing the view that the downtrend is not just a short-term blip. The ongoing negative momentum suggests that recent price action hasn't been strong enough to reverse the trend. Bollinger Bands are a popular tool for assessing volatility and identifying extremes in price movement. For Mereo, the upper band is at $2.87, the middle at $2.01, and the lower at $1.16. The band width of 0.852 suggests moderate volatility. What's striking is the current price position at minus 50.79, which means the stock is trading well below the lower band. This is a classic oversold signal and could indicate a potential rebound, but it also warns that further downside is possible if sentiment doesn't improve. The Moving Average Convergence Divergence, or MACD, is a trend-following momentum indicator. For Mereo, the MACD line is at the signal line at 0.043 and the histogram at minus 0.109. This negative histogram indicates that downward momentum is still dominant. The momentum value further supports a bearish outlook. While the decline may be losing some speed, there's no clear sign of a reversal yet, so investors should remain cautious. The Relative Strength Index, or RSI, is a key indicator for spotting overbought or oversold conditions. Mereo's RSI 14 is at 19.02, which is deeply oversold. RSI 21 at 23.47 and RSI 28 at 26.61 are also in oversold territory. The RSI momentum of minus 31.44 is negative, highlighting the extent of recent selling. Such low RSI levels often signal that a bounce could be near, as buyers may start to see value at these depressed prices. The stochastic oscillator helps identify potential reversal points by comparing the current price to its recent range. For Mereo, stock K14 is 59.04 and stock D14 is 76.69, which lean toward overbought in the short term. However, stock RSI K at 0 is extremely oversold, creating a contrasting picture. This mix suggests that while there may be some short-term resilience, the overall exhaustion from selling could set the stage for a possible upward shift if trading volume increases. Momentum indicators measure the speed of price changes. For Mereo, momentum 10 at -1.88 and momentum 20 at -1.58 show strong negative trends, indicating rapid declines. The rate of change ROC 14 at -86.6 is a massive drop, but the absolute price oscillator, APO at 0.034 and percentage price oscillator, PPO at 1.72 are slightly positive. This suggests that while the stock is falling fast, there may be faint signs of stabilization, hinting that the decline could be slowing. It's important to remember that the biotech sector is inherently volatile. Stocks like Mereo can experience dramatic swings based on clinical trial outcomes, regulatory approvals, or even rumors. This volatility can create both risks and opportunities for investors. Understanding the technical indicators in the context of sector dynamics is key to making informed decisions. With the current price near its 52-week low, Mereo is testing a critical support level. If the stock falls below 20 cents, it could trigger further selling. On the other hand, if buyers step in and the price rebounds, the next resistance levels would be the moving averages discussed earlier. Watching these key levels can help investors anticipate potential turning points. Several technical indicators, including the RSI and Bollinger Bands, are flashing oversold signals for Mereo. This often suggests that the stock may be due for a short-term rebound as bargain hunters move in. However, oversold doesn't always mean the decline is over. Sometimes, stocks can stay oversold for extended periods, especially if negative news persists. Despite the oversold signals, the overall momentum remains bearish. The MACD, momentum, and ROC indicators all point to continued downward pressure. This means that while a rebound is possible, the prevailing trend is still negative and caution is warranted. It's a classic case of a stock that looks cheap but could get cheaper if sentiment doesn't improve. For risk-tolerant investors, Mereo's current price could represent a speculative opportunity. The deeply oversold conditions and proximity to a major support level might attract buyers looking for a quick rebound. However, this is a high-risk play, and it's crucial to set a stop-loss, perhaps around 20 cents, to limit potential losses if the downtrend continues. Given the sector's volatility, waiting for positive catalysts such as favorable clinical trial results or regulatory updates can be a prudent strategy. These events can quickly change the outlook for a biotech stock like Mereo, potentially sparking a sharp rebound. Until then, patience and careful monitoring are advised. Based on the technical indicators, Mereo scores a bearish 4 out of 10, but with some rebound potential due to oversold conditions. This score reflects the current negative momentum, the stock's position below all major averages, and the possibility of a short-term bounce if sentiment shifts. Investors should weigh these factors carefully before making any decisions. Risk management is essential when dealing with volatile stocks like Mereo. Setting stop-loss orders, diversifying your portfolio, and only investing what you can afford to lose are key strategies. Biotech stocks can offer big rewards, but the risks are equally significant, especially when technicals point to ongoing weakness. While technical analysis provides valuable insights, it's always important to review the company's fundamentals. For Mereo, this means looking at its drug pipeline, financial health, and upcoming milestones. Technicals may suggest a rebound, but without strong fundamentals, any recovery could be short-lived. To sum up, Mereo Biopharma is in a deep downtrend, with prices below all major averages and negative momentum dominating the charts. However, oversold signals from the RSI and Bollinger Bands suggest a possible short-term rebound. Volatility remains moderate, but the risks are high. If you're considering an entry, be sure to have a clear plan and watch for positive news catalysts. In conclusion, Mereo Biopharma's current technical setup is a classic example of a high-risk, high-reward scenario in the biotech sector. While deeply oversold conditions could attract speculative buyers, the prevailing downtrend and sector volatility mean caution is essential. Always combine technical analysis with a solid understanding of the company's fundamentals before making any investment decisions.